Ritholtz Wealth and these four managing partners were able to build from less than 150 million in assets under management to over 7.7 billion in assets under management in 13 years. The four managing partners were Barry Ritholtz, chairman and CIO, Josh Brown, the CEO, Chris Venn, managing partner, and Michael Batnick, also managing partner. And in this time span of 13 years, they were able to grow Ritholtz over 51x. We're going to be breaking down the entire trajectory from what they were all doing before they founded the company in 2013, going back to 2008 when they actually launched their media empire called The Compound in 2018, and how that's actually led to the insane exponential growth that we see here in 2026. I'm also going to break down the timeline in terms of what entities were owned by the person or the individual for their personal brands, as well as when they launched different entities for the actual brand at large of Ritholtz. Similar to our previous breakdowns, I need to emphasize this at the very beginning, which is the majority of the growth came from the tail end of this trajectory. The last year alone, they actually grew over 2 billion in assets in just 1 year, but that's the headline people like to see. They don't like to talk about, again, where they started back in 2008. We've got that out of the way, so now let's actually just look at the raw total assets under management. This is directly from the SEC ADV filings that I pulled up on public domain. Their first filing showed up in 2014 at the 150 mil mark, and as you can see here, they had fairly good growth and consistent growth each year, starting at a 10 mil, then doubling, then adding 200 mil for the next 4 or 5 years. Then they had a huge jump here, adding 600 million assets in 2020, right during COVID. Then 900 million at the end of 2021. In 2023, back down to the 200. And then you see that they had a very large leap of 1.3 billion in 2024. And then 1.4 in 2025, and again now that 2 billion jump in just the past year. Now, before we get into the most recent 5 or 6 years of the acquisitions and acqui-hires that led to a lot of this growth, I want to actually focus on what is not captured here, which is this time frame from 2008 to 2013. This is when they had blogs and no firm. One quick clarification, the audience size numbers and monthly visits that you see here are tracked from 2026, not from 2008. This is really to emphasize that back in 2008, they were all starting with 0 audiences, but realized the power of a blog, the power of communicating with their clientele and sharing their insights. And by staying consistent, creating blog posts, podcast episodes consistently over the next 18 years, they're able to achieve these massive followings and these massive numbers here that you see on the screen. Downtown Josh Brown personal brand website, which primarily focuses on his books as well as speaking engagements. But today across social media, his audience size is 1.45 million. His website still gets monthly visits of 45,000. Michael Batnick, managing partner. He is the irrelevant investor. That was his blog. His audience size across social is 248,000, monthly visits of 12,000. And Chris Venn, also managing partner, he had a blog called The Certifiable Planner, the least active on socials, and now this blog is no longer active, but his audience size is also 2,700. At the start, before the firm was even founded, the chairman, CIO, CEO, managing partner, they were all committed to building out their own audiences within their own blogs, sharing their perspectives. Any one of them very well could have individually tried to go out and build their own independent RIA as they were continuing to grow their audiences. But rather than doing that, they understood the leverage of social media, of the internet. And so instead of individually pursuing it, they decided to come together. And that is the beginning of this story. The fact that each one of them was already bought into the idea of building out their own audiences in order to build something greater than themselves. And from that, you'll see very quickly how those previous experiences, those previous audiences and learnings and teachings and belief in social media have influenced their decision-making in terms of how they're growing Ritholtz. The first of this strategy that I want to emphasize is how they went about hiring as the years went on. As we know, Ritholtz was established in 2013, and then you start to see something that we saw with Root Financial, which is Acqui-hires. In 2015, they brought on Ben Carlson, now the director of institutional asset management. He had a blog called A Wealth of Common Sense. Audience size across social media, 369,000. Monthly visits to his blog, 372,000. They also brought on Nick Maggioli. Hopefully I got that last name right. Now the current COO. He joined in 2018. He had a blog called Of Dollars and Data. Audience size of 220,000 across social media channels. 222,000 monthly visits to his blog. Ritholtz understood that, hey, these guys are already bought into the system. They understand the power of social media. Let's bring them on. And now they've brought them on, absorbed those audiences as well. And so now across the 6 of them, they have 6 massive audiences that they can now funnel back into Ritholtz alongside their own personal brands. An additional way that the previous blog experiences and building an audience prior to Ritholtz and how it's actually influenced their strategy is based off of these 2 strategic moves. The first of which is the lift-off service program offering that Ritholtz offered. This was initially launched in 2015, but then relaunched with a partnership with Betterment in 2019. This is their no minimums, 0.50% annual fee, flat, full service offering for people of any type of investment size. A lot of independent RIAs I talk with today and over the past 2 years, they want to serve clients with at least 1 million in assets under management. Definitely a great business move. Obviously, it helps with sustainability, serving a higher net worth clientele to increase profit margins, not necessarily need to sacrifice all your time serving a bunch of accounts. But what I love about the Ritholtz team is they understand that most of their audience that supported them from the early days, back in 2008, 9, 10, a lot of them don't necessarily have 1 million in assets. And rather than saying, oh, sorry, we can't serve you or work with you, even though you supported us for the past 10, 20 years because you don't have enough money, go find someone else. They were like, no, we need to figure out how can we serve the people that started with us, that supported us from day one when we had nothing. And now when we're at 7.7 billion plus, we're going to turn them away? Heck no. We're actually going to build programs that allow us to serve them. So that's what this liftoff program is. And then you see it again more recently in 2023 where they acquire Future Advisor from BlackRock. This was a robo-advisor type of platform service, and they rebranded this to Good Advice, which is a mixture. It's not fully robo-advisor, but rather they're adding modern technology so that the client, the end user who's going to use this platform, gets the benefits of technology, efficiencies, cost savings, and being able to have that sort of service with an element of a human advisor in the loop. And I think you're going to see a lot more of this. I feel right now the big buzzword is AI platforms, robo-advisors, but Ritholtz is kind of spinning it on its head and saying, yeah, robo-advisors are great, but at the end of the day, a lot of times people still want to talk to an actual person. So they've created this fusion sort of service offering, which is their starting point for people under 1 million in assets under management. That's what this is, Good Advice. And so again, I really like the ethos, the mission, the dedication to serving all types of investors, regardless of asset under management size, that Ritholtz can now provide to anyone that's interested. Now we're going to get into the absolute behemoth of the media empire that Ritholtz has created within their brand called The Compound. Now the Compound alone, again, which is their media arm that encompasses video, audio, and text across social media channels, has 390,000 in audience size, and the website alone has 10,000 monthly visits. But what's more interesting is what is actually within The Compound. Within The Compound are 4 amazing podcasts that each tackle a different topic, a different niche, a different audience to some degree. First you have is Animal Spirits. This is what is the team reading, listening to, and consuming. It has 477 episodes where Michael and Ben from the Ritholtz team, as well as guests and others from the team, come in and share exactly what are they consuming, what's the content they're looking at, what are they reading, what are they listening to, allowing you to get insight into what these top executives, top managing partners, top advisors, what are they doing to get better, to stay on top of the market? What are they concerned with? What are they not concerned with? What are they actually consuming on a day-to-day basis? Then you have the Compound and Friends, which I think is probably the most popular of all. This is latest business news and investing news with guests. 254 episodes, and now you're able to leverage not only the hosts and Ritholtz teams audiences, but any guests that they bring on, they're able to leverage the guests' audience, as the guests will bring their audience into these shows. And again, this one is powerful because it's talking about the latest things, real-time emphasis on what's happening in the news. What are the newest investing things, the newest business topics that people are talking about? They're able to talk about it and have a discussion in real time as it's happening, as opposed to waiting, a week or two later to publish content. Then you have Ask the Compound. This is direct Q&A with clients, prospects, pretty much anyone. Has 234 episodes. You're primarily speaking with Ben and I believe Duncan. And this is a great way to really interact with your audience, whether they be current clients or prospects or just anyone that's curious. You're literally answering questions for your audience, with your audience, and showcasing your personality. And again, forming that trust, building that connection. Lastly, this is their newest podcast that they released called Talking Wealth by the Compound. This one specifically is very reflective of what Root Financial is starting to do, which is that flywheel for recruitment. So this is primarily for advisors. They're helping advisors navigate their careers, how to become better advisors, build stronger relationships, and also how to think about going independent, the lessons that the team has learned from going independent, and really just being raw and authentic and genuine about those experiences. Also bringing on guests. This is, again, the newest one with only 76 episodes. And then finally, they also even have merchandise. So not only you're getting content, you're also able to just represent the brand yourself if you love it that much, to buy a shirt, buy a hat, buy a hoodie, what have you. And this is the Compound that, funny enough, matches the name, which is probably why they picked it, is the compounding growth engine that Ritholtz has created in order to gain a massive following, build an insanely large top of funnel, and really nurture these prospects, their audiences, their current clients, provide value in every aspect that they can, in every form and medium that they have available to them, whether it be text, audio, or video. We've looked at how Ritholtz is composed and the media arm that they've built up and the acquisitions and acqui-hires that they've made, but what do they actually do for their clients and how do they actually serve them? So this is based off of their website. These are the 4 primary buckets that they put new prospects into and their current clients into. They have 4 different buckets. One is these, again, good advice, the 0 to 1 million, where people can self-serve. The flagship, which is 1 million to 7 million, I believe this is where you'll start getting that normal interaction and cadence with the advisor, a personal plan. Then you have the Preserve, which is dedicated for the 7 million to 25 million for people that want advanced strategies, more in-depth and more hands-on approach. And then finally, you have the Multifamily Office, 25 million plus. These are going to be your larger accounts, your ultra high net worth individuals. And these are the 4 that they break them down into. But what's even more interesting is, regardless of where you are in the process and what bucket you fall into, whether you found Ritholtz through a personal brand, a podcast, a YouTube video, a blog post, no matter where you came from, everything feeds back into this one page. This is their contact form. Every single CTA that they have goes back to this page. This is where everyone starts. So regardless of how large their top of funnel is, they're able to track, okay, our top of funnel is, say, 10 million impressions. All of that traffic funnels into getting people to go onto this page, this contact form, fill out information, and then schedule a call. So you can see here, this is their breakdown, their name, email, phone, zip code, standard contact information, how they want to be contacted. What kind of investor are you? Your total net worth broken down into these specific buckets. What is the amount that they're willing to assign so that they can tailor the assets, and again, just get more information. How you heard about them. So regardless of the top of funnel or how they got to this page, they qualify their prospects here, and they make sure to understand who is bringing what. How much are these people landing on this page coming from a referral? How many are coming from YouTube? How many of them are coming from a personal blog, right? These are all different areas that funnel into this page. And so they're still able to manage their tracking. And then finally, what's the final motivation? So overall, very simple form, very quick to fill out, maybe less than a minute to fill out. And then you just schedule a call. So definitely something to think about for your own firm is, regardless of what your top of funnel is, where you get your awareness, funnel them all into the same page. Don't overcomplicate it. Don't have a page called firm.com/contact/YouTube/video A, firm.com/contact/advisor C. You're overcomplicating it. What they've done extremely well is, yes, they have hundreds of different ways where you can get initially introduced to Ritholtz, but once you're introduced to them, there's only one page you can land to start, and that is this contact page right here. Now, to provide a very simple version of everything we just went through, here are the personal brands that are outside of Ritholtz. There are even more than this throughout the company, and I assume that they're going to continue to hire individuals and bring people onto the team that already have their own personal brands related to this industry. And from these personal brands, a lot of that traffic goes directly to Ritholtz. They have the compound within it with all these 4 podcasts that are also bringing in a huge portion of their audience. And all of that traffic funnels into one of these 4 categories. How much do you have to invest, and tailoring that specifically to how Ritholtz can serve you and help you achieve your financial goals and needs. I want to close out with, what are the specific things that stand out to me that make Ritholtz so strong and defensible in terms of their moat, in terms of their growth trajectory, and where I see them going? The first of which is the type of content. They have real-time content and evergreen content. A lot of times when you're starting out, you're really just going to focus on evergreen content. It's difficult to come out the gates with a social media strategy that encompasses evergreen content and real time. If you're just starting out, I wouldn't overwhelm yourself with real time, focus on evergreen, but definitely move towards building real time content as well. The next thing is obviously their media empire. It's the compound, right? The compound is their media arm that they've built inside Ritholtz, and that is the source of millions and millions of monthly impressions for them. And so by doing that, they're able to take 1 hour-long conversation, turn it into a video, turn it into 10 short clips, turn it into multiple blog posts, turn it into podcast episodes, and utilize that across all social media platforms. So they're able to repurpose every single piece of content in every single format. Next is the dedication to serving all levels of investors. Again, in my previous conversations over the past 2 years, advisors are really just so obsessed with trying to get high net worth individuals. If I have to see the letters H and W again, I'm gonna go insane. Like everyone, of course, they want, we want more money. We want investors with a lot of assets. We want at least $1 million. Cool. But a lot of times, who gets left behind? It's people that don't have enough assets, or people that eventually may have enough assets but are ostracized because they just don't have enough. And so they don't get that dedication. They don't get that service. Ritholtz flipped that on its head and said, doesn't matter how much you have in investments or how much you're able to invest. We're going to help you and find a way regardless, through their liftoff program, the good advice program, all the free content they put out there on a daily basis. I love that they have that dedication. Next, just from a business standpoint and sustainability standpoint, they have no key man risk from day one. Again, at the very beginning, when the 4 managing partners were contemplating, what are we going to do? Each of them could have definitely gone independent on their own, started their own firm with their own audiences. But rather than doing that, they decided to come together, have 4 people with massive audiences come together as one and build something greater than any one of them could have individually. And you see that play out in the hires that they make and the philosophy and the strategy and the decisions that they're making to continue to grow Ritholtz, which leads me to this last point, which is They're doing succession on their terms. What do I mean by that? This is a post from January of this year. Ritholtz Wealth Management executes employee-led succession plan to create industry's most visible, dominant, forever firm. The advisors I speak to generally fall into one of two buckets. The first bucket is, hey, I went independent. I have a very successful business. Now I have younger kids. Usually my two sons are also financial advisors helping, and I'm training them to plan for succession and the transition for when I retire. That's one bucket. The second bucket is I've built a really strong book. I want to retire. I want to sell my entire business to another independent RIA or to a roll-up, private equity, investors, a big conglomerate, right? And what I love about Ritholtz is they're saying, we don't want to do that. We want to have succession on our own terms, and we want to provide more ownership to more people within the company that have provided value. In this move alone, they had 29 more employees gain ownership into Ritholtz. It's really refreshing to see, and I think that is really going to help drive their sustainable growth as well as succession planning to make sure that Ritholtz lasts forever and continues to dominate the space and continues to grow and provide value to their clients, prospects, and everyone who consumes their content. There's my full breakdown of Ritholtz, how Barry, Josh, Chris, and Michael were able to come together and build something incredible. Let me know what your thoughts are on Ritholtz and their growth in the comments below. Also, let me know if you want me to do a breakdown like this for a specific firm that you've admired or appreciated and want to understand how they've actually grown their firm. And lastly, if you're interested, we do these deep dive analysis breakdowns for firms specifically in order to help you achieve your growth goals and understand where you can leverage what you're already doing to continue to grow your firm. Click the link in the description to apply, and we'll get back to you within 48 hours. Thanks so much, and see you on the next one.